time to come back together, and I'm going to hand my chair over to Christy Leonard, who is the Director of Operations and the Curator at the Museum of Science and History in Jacksonville. She's going to start us off on risk management and insurance, and Tina Peak will talk about some library issues.
Okay. Hopefully everyone can hear me okay. Thank you for the introduction, Miriam, and we will go ahead and get started. Ben Franklin famously said, "An ounce of prevention is worth a pound of cure." This is really what risk management is all about. It deals with the identification, analysis, and evaluation of risk, and with the selection of the most advantageous methods for handling risks. It's an aggressive approach that seeks first to avoid, control, reduce, or accept an identified risk before you insure against it. The first step in risk management is to identify potential risks. I've listed some of the common risks here. We learned about these earlier today in Kate's presentation, so I won't really spend a lot of time on these, but I'll just give you guys a second to look them over. Okay, and then the second step in risk management is to conduct a risk assessment. You can contract a professional, but if you're on a budget like I know most of us are, you can conduct a so the second step in risk management is to conduct a risk assessment. You can contract a professional, but like I was saying, most of us are on a budget, so you can conduct an internal assessment. Either way, there are three basic questions that need to be answered during the assessment. First, you need to determine which collections or objects within your collection are susceptible and to what risks. Here's an example from my museum. We have a collection of colonial iron tools that are stored on a shelving unit that sits underneath an old skylight. The skylight has been covered for years, but I know that it has leaked in the past. This is definitely a risk that I can identify. Now that I've identified a specific group of objects and the risk they face, I then need to determine what the loss of value would be. In doing this, it's important to consider more than just the monetary value. For example, I know that the tools from our records are probably worth around $1,500. But I also know that many of the objects are irreplaceable, and some of them serve as backups to similar objects that are on display in our exhibit. Now that I have determined the value, I need to think about the probability of this event happening. I know the skylight last leaked about a year ago, and it was repaired. I also know that from May to August, we get heavy rainstorms almost every afternoon. So I can say with confidence that it's very probable that the skylight will leak again, maybe even this summer. So this is just a very basic example of some of the steps that you would take during a risk assessment. We focused on just one set of objects. When you do this in your collection, it's really important that you hit everything in your collection, including objects in storage, on display, or on loan. And then once you have this information, you will be armed and ready for the next step, which is mitigating risks. There's three basic actions you can take depending on the type of risk your collection faces, and also, of course, time and budget. First, you can eliminate the source of the risk. So if we go back to our example with the tools in a skylight, a simple and no-cost solution may be to move the shelving unit out from underneath the skylight. This would eliminate the risk to the objects. Or we could establish a barrier. We could leave the shelving unit where it is and cover it with plastic sheeting, which is fairly low cost. This way, if a leak develops, the plastic will shield the object. Or we could act directly on the agent responsible for the risk. We could have the skylight removed altogether and re-roof over it. This is obviously a high-cost solution, but it would eliminate the risk altogether for the future. So as you can see, in many cases, there's more than one solution to mitigating a particular risk. You have to determine which one is better for your particular situation and your budget. I'll give you just a couple more examples of mitigation from our museum. No judging. About 2 years ago, our museum began to accept fine art objects as incoming loans more frequently because we wanted to demonstrate the relationship between art and history as well as art and science. Our team wasn't used to handling fine art, and we had a couple of small incidents. So I called Kristen from the Comer, and she volunteered to do a training specifically for our staff. This was an entirely free solution, and it made a world of difference. We haven't had any incidents since then. So I think when you're thinking about mitigating risks, it's really important to remember that we can use each other as resources. And another example I'll give you is earlier this summer, we actually had a turtle stolen from our Florida Naturalist Center. We used to have locks on all the cages, but over the years, some of them have broken, and we didn't really have the budget to completely replace the enclosures. So we got a little lax. But this incident really kind of made us wake up and realize that we need to remember to act on risks that can affect this area in particular. We have since then taken inventory and created a budget for the enclosures that need to be replaced, and these expenses will be worked into the budget slowly as we have funds available. But in the meantime, we purchased some inexpensive clips that keep the enclosure lids screwed down. It's definitely not a foolproof solution, but it's working for now. So, all right, the fourth step in risk management is to create a risk management policy that addresses known risks to the collection and ways to avoid them. The policy should also identify protective and preventative measures. And some of the examples you guys probably already know, but they can be things like fire detection and suppression alarms, security alarms, training and proper handling, storage and transport, pest control, humidity and temperature control. Collection inventories are really important in risk management, especially reporting missing objects during inventories, and of course disaster preparedness. And your risk management policy should be part of your collections management policy, and it's usually found under collections care. All right, so now to the tricky business of insurance. Insurance for museum collections falls under fine arts insurance, which is a form of inland marine coverage. One thing to keep in mind is that fine arts insurance really is for more than what you may consider to be fine arts. It covers most everything a museum would have in its collections, from historic objects to contemporary art and fossils to dead specimens. And I'll mention just briefly here that I am focusing on insurance for collections, but at the end I will give you just some examples of the other types of insurance that museums typically will need. So before you shop for fine arts insurance, there's a few important things to consider. First, you need to identify the types of risk you want to cover and assess the current conditions and the risk factors. This will be easy if you have completed the risk assessment that we've talked about. Next, you want to check for common problems with your collection that could prevent you from getting a low rate. For example, insurance agents often say that there are a few things in particular that will keep museums from getting competitive rates. Do you keep adequate and up-to-date records? Do you know what, where, and how many objects are in the collection? Is your collection protected against theft? What measures are in place to protect the collection from common risks? And do you know how much your collection is worth? I know that can be a very, very tricky question for many of us. But you'll be in a better position to bargain for insurance when risk factors are low. Also remember that a museum's collections management policy will come into play as a means of demonstrating to a prospective insurer that management in the museum is not left to chance. Once you've identified a potential fine arts policy, it's really important to review it thoroughly to ensure it offers adequate protection. I'm going to go over just a few questions that you will want to ask your agent or the insurance company. The first one is covered property clearly defined. You want to consider collection types, loans, objects in temporary custody, and traveling exhibits. Also consider objects in transit or on loan at other locations. MASHA's fine arts policy, for example, covers all non-living collection objects and incoming loan objects housed within the museum. It does not cover collection objects on loan to other institutions or incoming traveling exhibits or living animals. Therefore, we require some supplemental insurance in some areas, and we also put policies in place where borrowing institutions must provide insurance for loaned objects. Another question you'll want to ask is, are the exclusions realistic? Don't be misled by the terms all risk and wall-to-wall. There are always exclusions. For example, MASHA's fine arts policy does not cover loss or damage due to flood, earth movement, wear and tear, military and war actions, virus and bacteria, or nuclear damage. These exclusions are all pretty standard, although you sometimes will have the ability to negotiate with your insurer. Other excluded perils may include insect or animal damage, shipments by mail, and loss due to extreme temperature or humidity. And also keep in mind that you can purchase supplemental insurance for some perils, especially flood. Next, you want to ask if your valuation procedures are realistic. Is the basis for valuation the same for objects the museum owns as it is for loan objects? For example, is valuation based on fair market value at the time of loss, or was an insurance value preset under the terms of a loan agreement? It's important to double-check wording in these scenarios and make sure they match up. And then two other things that you might want to consider with your insurance policy is a pairs and sets clause, which basically means if one piece of a pair is lost or damaged, the insured has the option of claiming a total loss for the pair, or a buyback provision, which allows the insured to buy back a lost or stolen item that has been recovered after the claim has been paid. So these are just a few of the things you should consider and understand before signing on the dotted line. And quickly, I'll just tell you a little bit about the other types of insurance that we have at our museum. We, of course, have building insurance. We have flood insurance. We have boiler and machinery insurance, general liability insurance, and I'll make a note here that our incoming traveling exhibits are actually covered under our general liability policy. We also have a liquor liability policy, an umbrella policy, and then we have some very specific policies for employees. We have a crime coverage policy, and we even have a molestation policy. When we serve a large number of children, so that's something that the board of directors feels is important for us to have. Okay, so the last thing that I will talk about today are just some ways that you could possibly save some money when you're thinking about insurance. First, obviously, like we said before, identify risks and avoid them or prevent them. The cheapest accident is the one that doesn't happen, and this is really what risk management is all about. Next, you want to be sure to keep your policies and your procedures up to date, and you want to practice them often and train and retrain whenever necessary. Also, and I think this is a big one, only insure what you need to insure. During your risk assessment, you may identify objects that for whatever reason aren't worth insuring. Our museum or your museum may choose to self-insure some or all objects. Self-insuring basically means that if an object is lost, damaged, or stolen, the museum will pay out of pocket to repair it or replace it, or it may choose not to replace it at all. Our living collection at the museum actually falls under this category. We do not insure it, and if an animal expires or strangely would happen to be lost, we would simply replace it out of pocket. And that's because the animals that we have are all very common native animals. And then the last thing that I'll say is just remember that you can negotiate with your insurance company. Terms and rates are often things that you can discuss. And that's really risk management and insurance in a nutshell. If you don't have it already, I would recommend the book that I have here on the screen, A Legal Primer on Managing Museum Collections. We actually refer to it all the time at MOSH. We use it quite a bit. And it's got some very useful information on risk management and insurance, as well as some other things. So I think we'll have time for questions a little bit later. So now I will turn the mic over to Tina.
Good afternoon from beautiful Bach-Tower Gardens. Glad to be with you. I'm a public library director, so I'm speaking to you from a library, particularly a public library point of view on my understanding and my newfound knowledge of insurance in the library market. When I was asked to address the subject of insurance for libraries, building and content, or what I translated as my library's homeowner's policy, I realized I'd never given that policy much thought. I knew it existed. Claims had been filed due to damage on more than one occasion during my tenure as library director. City departmental directors are not able to shop for our own coverage, premiums, or needs. Risk management is handled through our city's Human Resources Department. The HR director sends the finance director the library's cost each year, and magically it's pulled out of my budget. Our risk is assessed as an entire group of city departments, no negotiations. The City of Lake Wales, Florida is a member of a pooled risk group. As a department of the City of Lake Wales, the public library is covered under this plan. Our city shares coverage with other governmental agencies through the carrier Public Risk Management. Public Risk Management assesses and audits our city's entire inventory every 3 years, including all the equipment, the buildings, vehicles, collections, and content. They also consider our workers' comp claims within our own risk pool. The Lake Wales Public Library's content and building replacement amount is determined by Public Risk Management using factors including the number of items in our library's collection, not special collections only, square footage of our building, age of our building, and quantity of computers and electronics. Under the pooled risk management, there is no special consideration given to rare or important collections in our public libraries. We are only one small piece of the overall pie. The pool model is a cost-saving measure for public entities. All members of the pool, from a variety of community agencies, share the cost of insuring and share the costs resulting from losses and claims filed. Any single claim filed by an agency reflects in sharing higher or adjusted premiums in upcoming fiscal years. In 2011, during extreme weather conditions, a tree fell on the Lake Wales Public Library's roof. In addition to a huge gaping hole in the roof, books and carpets were damaged. The resulting claims for repairs and recovery caused premiums to be adjusted to police, fire, public works, all departments throughout our multiple agencies within our own risk pool. In discussion with my HR director, I've soon realized the scary part. We should all ask what our risk management carriers consider the replacement value of our institution's buildings and collections. Someone somewhere in your organization knows your institution's amount. Replacement values for a rare and irreplaceable artifact, at least one under a pooled risk management policy, are considered with no more weight than the loss of a police vehicle, a vandalized bathroom, or a library roof. Educating yourself is essential. I learned the replacement value of the Lake Wales Public Library's building, a separate replacement value of the Lake Wales Public Library's entire collection, and the replacement value of our library's technical equipment and data processing. I posed the question to my HR director. I can purchase special riders on my personal homeowner's policies for jewelry, artwork, cameras, and electronics, Can the library do the same for a special collection? She checked with Public Risk Management, and this option is available. A qualified appraisal of an item or a collection is necessary, but irreplaceable items can be insured through a policy much like a personal articles coverage. Claims on separate coverage begin once the entire amount of the pooled replacement dollars is expended after a loss. The largest single item in my library's operating budget is the cost of risk management insurance. In the Lake Wales Public Library's fiscal year 12-13 budget, it was approximately $41,000 out of my operating budget. I discovered that there's very little any city department can do to affect a discount for the entire risk group pool. I listed off many emergency and safety items we put into place at our library. Do any of these result in a lower premium for the entire risk pool? Fire extinguishers, fire and intrusion alarms, hurricane shutters on all entries and windows, fireproof filing cabinets for sensitive archival documents, defibrillators, pest control. I was told our risk group pool only receives a discounted premium if all members of the pool have a drug-free workplace policy and an organized employee safety program. Nothing else results in a reduced premium. My largest learning curve came when my HR director gave me the breakdown of the Lake Wales Public Library's replacement value. My library is a two-leveled, 20,000 square foot building. It houses a circulating and reference collection of over 110,000 items. Our special collections include over 30 rare archival maps, over 2,000 archival photos, 8 specific special collections, artwork, the same list you can probably tick off. My current replacement values for the Lake Wales Public Library is $2.588 million for my building, $3.159 for the content, and $41,100 for electronics and data processing. If a catastrophic event left the Lake Wales Public Library a total loss, the insured value of everything is $5,788,900. The hard reality is our library building, as it is with no content or technology considered, could not be replaced for that amount. The exercise I undertook was a real eye-opener. If you're not currently aware of the replacement value of your building, its contents, and electronics, I recommend that you find out who is and ask. The large premium assessed to our library's budget was something I considered I had no control over. I often looked at that number in my budget and thought of all the ways I could spend it on staff, materials, or electronics. I realize now that it is my responsibility to determine what items in the Lake Wales Public Library's special collection should have additional coverage. It's my responsibility to document this part of our emergency plan. The scary reality is that there are shortfalls in our risk coverage. It's also my responsibility to determine if this library's budget can afford additional coverage and incorporate these facts into the final draft of the special collections policy.
This is Miriam with, and I want to say a particular thanks to Tina. I think both of our presentations from Christy and from Tina were really interesting. But when we asked Tina if she would do this PowerPoint, she literally responded, well, the city takes care of it. And the city takes care of it. And I think that Tina did an amazing amount of homework. And we asked her to proceed with the presentation because in many ways, I think this is the one time in all of our webinars when we have had two such starkingly different presentations. In other words, you heard night and day, black and white between these two presentations. And we thought that it was really important to present those points of view. So having done that, let me invite Christy back up to the microphone here, but also see if any of you have questions. And so Christy's back up to the front of the room and close by if anybody has questions for her or for Tina. One of the questions that is being asked up in North Florida is, wouldn't the insurer argue that instead of reimbursing the $3 million for the contents, that they would give you $1 million for electronic copies and access? So that's a question that's more on the library side. In other words, if the coverage is for a particular amount, would the insurer be willing to mush that amount to different places?
This is Tina. I was told exactly that. I was told that if you had a catastrophic loss, God forbid the place burned down tonight, they would basically write the city a check for that $5+ million and tell us to recover whatever we could out of the loss. And I guess in effect, and to be very honest, when I was working with my human resources director, who we have both been with the city of Lake Wales for over 30 years, she was shocked because she's never noticed that the content is actually worth more than the building is worth, or according to the insurance company as a replacement value. But when I questioned her about the additional insurance, that's exactly what she said, because she went back to public risk management for me, and they said once your entire replacement cost is exhausted, which wouldn't take long at all, then you would have the ability to file claims against any additional insurance you have. So that's correct. And I would assume that if we were going to replace the building on the same site, it would go down by half square footage. We'd have maybe a 12,000 square foot building, and then the rest would have to go to content. Back to you, Marion.
Thanks. I see that Elise Lecomte made a comment here, and I know a lot of people can't read the fine print, so let me share it, which is that the Florida Museum of Natural History in some ways is like Tina's situation in a city library, because they are a state institution and the state is self-insured. But museums do have different kinds of options for working with insurance companies than seem to be the case with the city library example that was presented. And then the other question, and I'll ask Christy to answer that, is a brief description of what wall-to-wall coverage is.
So I'll give you my understanding of it, and then if someone else wants to jump in, feel free. My understanding is wall-to-wall is exactly what it sounds like. It's everything covered within your building from one wall to the other wall. But like I said in the presentation, there are always, always, always exclusions. And that's really where you have to talk to the insurance company and find out what is not covered.
And this is Miriam, and I'll add that in the traveling exhibition business where I used to work, wall-to-wall also referred to the moment you took the object off the wall at your institution till the moment you hang it at the next institution. But once you have hung it at the next institution, as Christy explained, you might have a policy that does not cover the work at that other institution. So again, I think Christy said it loud and clear for all of us. You have to check your specific policy to see what it is, and those pages and pages of fine print, that's where you're going to find the answers to questions like these. I'm going to turn the mic off for a second to see if anybody else would like to jump in with a question or with a comment. This is Miriam, and Lauren Emmers has a question here in Gainesville.
So typically with fine art museums and fine arts insurance policies, we don't cover our whole collection, because the idea is that if there is a catastrophe, you might lose one gallery or part of your storage before you can have someone come in and take care of it. So I'm just curious, Christine, maybe you can answer this. What percentage do you normally cover with your fine arts insurance policy?
That's a really, really good question. In doing my research for this presentation, I came to the conclusion that we are grossly underinsured when you look at our entire collection. and I think that's a very common problem among museums. But if I had to guess, I would say maybe that our fine arts policy would cover maybe a fourth of the objects that we have in our collection. It is kind of a blanket policy. We don't name specific objects in it. I'm not sure with real fine arts if you can actually insure specific pieces. I would imagine. Okay, so Kristen from the Cummer saying that there is a blanket policy also. So yeah, I would definitely say we're underinsured, and probably a fourth of our objects would be covered.
Anybody else want to jump in or have a comment?
This is Lynn Robertson in Northwest Florida. I found a few years ago, just in making some general inquiries, because we are kind of lumped in with the university for fine arts insurance, or at least what I thought was fine arts insurance. I found that the risk management person was trying to save money, and instead of fine arts, he had put all of the loan material that we had borrowed from other institutions and individuals on something called, I think it was other property, other insured property, or something like that. And when I asked the insurance agent about that, he told me that that was totally improper, even though the person at the risk management office of the university said, oh, it's just the same thing. If we had a table that was worth a couple $100,000 and it got destroyed, under that policy, the insurance company could go out and find out what a table of that size would cost at IKEA, and that's what we would get reimbursed.
And I think what's really important about what Lynn has just said is the message that we heard with Tina, from Tina, which is if you are part of a larger organization, you need to be asking a lot of questions and not making the assumption that you have the coverage that makes sense to you.